Why did one politician's portfolio become a national obsession? Because money leaves footprints, and politics magnifies every step. Nancy Pelosi was the Speaker of the House. Her husband, Paul Pelosi, is a private investor. Their trades are legal, their disclosures are public, and that combination lit a fire. The system expects sunlight. Since 1978, federal officials have had to disclose assets. In 2012, after a wave of outrage, Congress passed the Stock Act. It barred trading on non-public information. It forced timely reporting of trades. Within 45 days of a transaction, you file a report. It lists the ticker, the type of trade, and a dollar range. Not exact amounts, just a band. Those forms go online. Watchers scrape them. Journalists analyze them. Social media gamifies them. And a new niche was born. Congressional trader trackers. Bot accounts that ping every time a lawmaker buys or sells. Memes followed. Jokes about Pelosi trades. Claims of uncanny timing. Fans call it savvy. Critics call it suspicious. Here's the reality. Paul Pelosi has made large, complex trades, often in blue-chip tech, options, long-dated calls, big numbers inside wide reporting ranges. The timing sparked debate. In early 2021, he bought Tesla options. Washington was pushing electric vehicles. In 2021, he bought Microsoft calls. Soon after, the company landed a major defense contract. In 2022, he bought Nvidia options. Congress was advancing a semiconductor bill. Optics mattered. The headlines swarmed. Pelosi's office said she had no role in his trades. She said she owns no individual stocks. Filings list the trades under her name because the law covers spouses. She denied any wrongdoing. No agency has proved insider trading against her or her husband. But the controversy did not fade, because this isn't only about proof, it's about perception. Public trust is fragile. When lawmakers vote on policies that touch the market, every coincidence looks loaded. Every gain looks suspect. Even if it's legal, even if it's disclosed. The Stock Act tries to draw a line. It says members of Congress are not above insider trading laws. It says they must report trades quickly. It lets the public see patterns. But enforcement is weak. Miss a deadline, you pay a small fine. Break the rules, investigations can be slow. Penalties, light. And the disclosures are blunt instruments. Ranges hide precision. Options add complexity. Context gets lost. Pelosi became the face of the issue. Not the only face, but the most visible. The speaker is always under a spotlight. And the trades made an easy story, a symbol of a bigger problem. Then the debate widened. Should lawmakers trade individual stocks at all? One side says yes, America is a free market. Members should be allowed to invest like anyone else. Disclosure keeps everyone honest. Don't punish the many for the sins of a few. The other side says no. The conflict is built in. Members have access to briefings. They see legislative calendars. They hear market-moving whispers before the public. Even if they never act on it, the suspicion is corrosive. A ban is cleaner. No stock picking. No options. Just diversified funds or blind trusts. No dalliance with the gray zone. Nancy Pelosi was pressed on that question. In 2021, she said lawmakers should be able to participate in the market. It's a free economy, she argued. That line drew heat. Later, she signaled openness to reform. If it's comprehensive. If it covers the judiciary too. If it's enforceable. A sweeping package was floated. It didn't get a vote before the midterms. Nothing passed. The fire kept burning. Meanwhile, the trades kept coming. Across Congress, not just in one office. Democrats, Republicans. Some bought defense stocks before conflicts. Some sold travel stocks before lockdowns. Some beat the market. Some didn't. A few were investigated. Most were not charged. The noise never stopped. Behind the noise sits a system of forms and dates. Periodic transaction reports. PTRs in the jargon. You file them with the House clerk or the Senate. Anyone can read them. They show who bought, what they bought, when they bought, within a range, within 45 days. That timing matters, because a trade disclosed a month later can't be front-run, but it can still raise eyebrows. especially when Congress is writing the very rules that shape those companies' futures. The Pelosi tracker effect took on a life of its own. Retail traders joked about following her filings. Financial influencers built dashboards. The myth grew bigger than the data. Claims that her returns crushed the S&P 500. Cherry-picked charts raced across timelines. Skeptics pushed back. Real performance is hard to pin down with ranges. Options muddy the math, and disclosure delays blur the picture. But in politics, myths are fuel. They power arguments, they tilt polls, they drive bills, and the bills keep coming. The Ban-Conflicted Trading Act, the Trust in Congress Act, proposals to force blind trusts, to limit holdings to broad index funds. Sponsors span the aisle. Populists and centrists find rare common ground. Polls show broad public support for a ban. Yet the details divide lawmakers. What counts as a conflict? What about spouses? What about kids? How strict is strict enough? The controversy around Nancy Pelosi's disclosures is more than a headline. It's a mirror. It reflects a century of American anxiety about money and power. It asks an old question in a new market. Can you write the rules and still play the game? And what happens to trust when the crowd thinks you can't? So the law tries to answer, and the market asks the question again. In 2012, after a bruising decade of bailouts and bail-ins, Congress passed the Stock Act. Insider trading rules would apply to lawmakers. Trades would be disclosed, fast, within 45 days, publicly. It sounded simple. It wasn't. Transparency changed the battlefield, not behavior. It turned trades into headlines, and headlines into politics. Nancy Pelosi stood at the center, not because she traded. She says she doesn't. Her husband does. Paul Pelosi, a wealthy investor, longtime market player. His trades became her narrative. The disclosures told the story in numbers. Options in tech, heavy positions, big swings, Tesla, Alphabet, Apple, Nvidia, Microsoft, millions at stake, sometimes millions on paper, sometimes losses. Each form fed the debate. Is timing fate, or foresight, or access? In 2011, a television investigation poured gasoline on old doubts. A segment alleged that Pelosi had access to shares in the Visa IPO while credit card legislation moved through the House. She denied wrongdoing. No charges followed. The bill moved. Years later, a stronger version would pass, but the damage was already done. The idea stuck that lawmakers could legally do what would sink a CEO: trade while voting, vote while trading. The Stock Act tried to wall off the worst. It required swift disclosures. It banned using non-public material information. It promised accountability. Then it ran into reality. A database people rarely check is not a fire alarm. A $200 fine for late reports is not a deterrent. The public filled the gap. They watched, they scraped, they posted. Accounts went viral. Retail traders joked about buying what Nancy buys. Under the jokes was a deeper shift. Voters were becoming auditors. Every filing fed a feed. Every feed fed suspicion. Pelosi pushed back. She said the trades were her husband's. She said there was no coordination. She said lawmakers should follow the law. Critics asked for a higher bar. No stocks at all, for members and for spouses. Blind trusts, index funds only, no options, no single-name bets, clean lines, clear waters. Bills were drafted. Across parties, different names, same aim. Ban trading while in office. Enforcement with teeth. Year after year, momentum built, then stalled. Jurisdiction fights, carve-outs, definitions. What counts as a blind trust? What is a covered security? Where does staff fit? Who enforces? Each answer had enemies. Back in the filings, the trades kept coming. One stood out: Nvidia. In 2022, as Washington debated subsidies for domestic chips, disclosures showed a large position in Nvidia options. The optics were terrible. It didn't matter that many investors liked the stock. It didn't matter that the position was later closed at a loss. The timing wrote its own headline. That's how controversy works. It thrives on the appearance of closeness. Proximity is its oxygen. Conclusive proof rarely appears. The ground is fought on trust, and trust is fragile. History has been here before. In the late 1980s, 5 senators were dragged into the savings and loan scandal. No formal corruption was proven for most, but the phrase that stuck was brutal. The appearance of impropriety. That standard haunts Congress. It matters less what's legal, and more what looks like self-dealing. It's why disclosure exists. It's why ethics committees hold hearings you'll never watch. It's why rules pile up like snowdrifts. The Pelosi story threads through all of it. Her critics point to trade after trade. They see coincidence as pattern. They see advantage as design. Her defenders point to the lack of charges, to the public nature of the filings, to a husband with his own career. 2 narratives, 1 set of forms. A century earlier, America dealt with the Gilded Age. Railroads, trusts, senators who were also speculators. It birthed the SEC. It birthed financial disclosure. It birthed a new idea. Sunlight could disinfect. But sunlight can also blind, turn every shadow into a scandal, every profit into a plot. The modern twist is speed. A disclosure today is a trending topic tonight. Algorithms do not do nuance. Outrage travels faster than context. And yet the questions are serious. Should Congress ban stock trading for itself? Should spouses be covered? Should blind trusts be mandatory? Should options be off limits? What does blind even mean in an era of 24/7 news? Supporters of a ban warn about policy risk, about classified briefings, about committee whispers and draft texts. They say the only safe harbor is abstention. Opponents warn about overreach, about punishing families, about public service scaring off talent. They say index funds and disclosure work just fine. Both sides claim ethics. Both claim the public. Pelosi has straddled this divide, at times signaling openness to stricter rules, at times defending participation in the market. It's a tightrope no leader enjoys, because the crowd below is not neutral. It counts jobs lost, mortgages dodged, 401ks cut in half. It sees Washington as immune to gravity. The Stock Act was supposed to tether Congress to earth. Instead, it tethered it to a new kind of scrutiny, permanent, crowdsource, unforgiving. If you win, people wonder why. If you lose, they wonder what you knew. The next step may be sweeping or cosmetic. Another bill, another database, another carve-out that guts the heart. History says reform comes in waves. Scandal, outrage, action, erosion, repeat. The names change, the pattern holds. Which brings us back to the present, to a portfolio under a spotlight, to an institution with its back to the wall, to a public that wants proof, not promises. What happens next will decide more than one person's legacy. It will test the story America tells about itself, about fairness, about rules, about who gets to profit from the future they help to write. Rules are only as strong as the people who enforce them, and only as fair as the people who write them. So a new fight began, not over one trade, but over the right to trade at all. Ban the practice or tighten the guardrails. 2 camps, same goal on paper, very different paths. On one side, the ban crowd. No individual stocks, no options, no tinkering at the edges. Members, spouses, and dependents either divest or use blind trusts. Hold broad index funds or treasury bills. Nothing else. Clean, simple, hard to game. On the other side, the disclosure defenders. They say transparency already works. Post trades fast. Punish late reports. Let voters judge. They argue banning spouses is a step too far, that families have rights too, and that blind trusts aren't magic. A trust that still knows your public positions can still tilt. Pelosi lived at the center of that storm. Her critics pointed to the optics, spikes in tech names, options on chip makers, trades near big votes. Her answer was consistent. She didn't place the trades. Her husband did. He's an investor. She's a public servant. Different lanes. That wasn't enough for many. The idea of any profit tied to official power felt wrong. So bills started flying. Bipartisan ones, from progressives and conservatives, from backbenchers and headline makers. Some would force blind trusts. Some would ban individual stocks altogether. Some would lift penalties for late reports, from a few $100s to fines that sting. Month after month, The proposals stacked up and stalled. Why? Because writing a rule that covers every wrinkle is hard.